Nirmal Jain of IIFL also joins us. Nirmal, good morning. Thank you for joining us. How will life change for NBFCs and for IIFL post the RBI announcement?
So RBI announcements have been very timely, and there are a few positive things in terms of interest rate cut, repo cut, and hard cut in the reverse repo rate. But I think the moratorium that they announced, there's a bit of some clarification required. One is that they allowed moratorium for loans from 1st March. But I think the objective of the policy and RBI's intervention is that you want to alleviate the pain caused by disruption due to lockdown. But if you really look at it, then the loan which is a 60 DPD, a 60-day delinquent on 1st March, will, under the new regulation, the way we read it now, will become NPA. It would not have become NPA otherwise because most of the collections happen in the month of March. So I think RBI needs to provide, one clarification on that, so that what will happen to the loans which are, say, 30 or 60-day overdue on 1st March, because it's impossible for any lender, like, banks or NBFCs to collect, particularly in the later part of the month of March. And industry practice has been that most of the collections happen in the month of March. Secondly, what RBI has said, that 3 months interest period has to be accumulated and paid together. But if you look at reality of business loans, typical business, supposing, is making a 2 lakh rupees contribution per month. When I say contribution, is knocking off raw material, power, and other variable costs. Now, out of the 2 lakh rupees contribution, your fixed cost, which is rent, salaries, will take away something like 1.5 lakh rupees. So it's 50,000 rupees that any typical businessman or a small businessman is left with. Now, if your business is disrupted for 3 to 4 months, then you have an overhead of 4-5 lakh rupees, which you will take at least a year to cover if your business resumes to normalcy, if at all, And therefore, no businessman will be in a position to, a small businessman I'm talking about, I'm not talking about Reliances and Infosys of the world or top 100 companies, leave them aside for a moment. But the 100 million businesses which are there, they won't be in a position to pay the accumulated interest after 3 years. And so I think that also has to be looked at. 2008 crisis, which was much lesser in terms of impact, there also, if my memory serves me right, then the restructuring was 1 year or 2 years or much longer period. So I think RBI will have to consider that. Otherwise, what will happen on 30th May, there will be a bigger pain for most of the NBFCs and banks. The impact of this is unprecedented, for the mankind, forget about India or us. So we really need to understand how businesses slow down, how their contributions and profits evolve. And we have to, RBI and government have to work together to make sure that they help them in terms of their financials because of the impact of 3 months, because their costs are fixed. And 2 is also they help them in terms of tax cuts and revival in demand to make sure that, we come out of this unscathed, not only physically in terms of health, but also economically in terms of jobs and incomes. And also the quality of assets with the banks and NBFCs.
So, Nirmal, specifically at IIFL, could you tell us that what do you expect in terms of activity at the SME and the MSE level? Okay, moratorium has come, but that's like delaying the problem. That's more like a band-aid approach. It's kicking the can down the road. In 3 months, some of these, some of the borrowers may not be healthy enough. So what happens after 3 months?
That's why I'm saying that the only way we can deal with this is that, this is a much larger problem. It's not only problem of banks and institutions. For government also has to look at it. In India, 85% of workforce is in informal sector. Informal sector means they don't have the provident fund, profit, and they are either mom and pop shops or employed by people like this. 85%. And this entire sector, government has to look at it from a larger public welfare point of view. It's not only question of their defaults, but if this entire sector will be under stress, there has to be something has to be done. Otherwise, we have a much bigger crisis at hand. So I'm sure the government, and they are looking at it. And as far as we are concerned, our SME business portfolio is just about 15% of our total book. But the lot of collections have happened the month of March, which obviously could not happen. But what we are trying to seek clarification from RBI is that the moratorium is only for 1st March onwards. But what happens to loans which is, say, 60-day overdue on 1st March? That collection also could not happen in the month of March. The objective of the policy is to provide you 90 days before you consider it a bad quality asset, because most of the loans can't be collected on the due date. Many loans, not most of the loans. Sometimes even governments don't pay on the due date. So, it's not a question of... so this 90 days, it becomes shortened at 60 days because of the way policy or the COVID-19 package of RBI is interpreted. Then it will become hard not only for us, but for all other NBFCs and even for banks for that matter. So I'm sure that banks and NBFCs, in fact, now what has happened is that most of the physical interactions are not happening. So it's very difficult for even associations to take up the matter, but people are taking up through media channel like yours or by writing directly. And so, for us, as I said, that the business loan collection of March is impacted. And obviously, as of now, all businesses are shut, so we are not able to lend. But we continue to, we have come out with this COVID-19 emergency personal loan package, which is all our existing customers can borrow based on their eligibility personal loan just at one click, which is just trying to help them overcome, this problem because of lockdown, because many people might need some money as their income sources, and particularly the self-employed and people employed in informal sector, where the salaries may not come in time. People like you and me will not worry because our salaries get credited at the end of the month. But 85% of workforce in this country has to worry, and that is where all of us have to think very seriously about.
Yeah, absolutely. Nirmal, what is the market pricing reflecting? Have we seen the worst of it all? Or do you think now with the lockdown in the US only getting extended, their numbers already increasing and topping up the tally of China, and we don't know how long the lockdown for us is also going to be, and whether the infected cases are going to finally plateau out the numbers? Is there a chance for the market to retest the previous lows or, for that matter, fall further?
There is a chance, but the greater chance would be that market would recover because, like in Bombay or Maharashtra, where the number of cases are largest, today is the 10th day of lockdown. So in case this problem were to surface, would have surfaced by now. Although many the international media will say that India doesn't have adequate number of testing kits, and therefore the number of cases may be a lot more than what is being reported. But I don't agree with that, because if that was true, then we would have heard stories about hospitals getting overwhelmed or their patients are queuing up and there are no doctors to cater to them. But none of these things are happening. So fact of the matter is that India has come out of it mostly. I won't say come out of it because 10th day of lockdown in Mumbai at least, which is, or Maharashtra, which have been the most connected with the outside world, international world, and therefore most impacted also. And Kerala also has been impacted a lot. But the number of cases are 1,000. They are unlikely to go to 100,000 like US. So therefore, India has a much better chance to recover. And what will happen post this, globally, okay, this may take 1 month, 2 months, 3 months. But the world will come out of it. Now, after the world comes out of it, relatively, India would be far better placed, in terms of as a destination for investment, because still there's a global investment in the emerging markets or outside US that has to find some destination. So India will be a much better place. So India's macro can recover much quicker because oil prices will remain low, commodity prices will remain low, and India is net importer of commodities as well, not only oil. So it all, again, is very important, therefore, for government and RBI not to miss this opportunity and make sure that domestic businesses are catered to. Somebody has to really go deeper and understand the extent of problem and find a solution which really works, not short term, but understanding the real problem. But I have a feeling that the previous lows to be tested, there's a probability, can't be ruled out, because there's a trigger event, then that can have an impact, but it's not very likely. I'll say maybe 5%, 10% probability, but there's a 30-40% chance that after 10th April, when people say that okay, lockdown is going to get lifted on 14th, you can see a very strong recovery.
Sure. But Nirmal, are you finding genuine value on the screen right now? Are prices reflecting that? We've seen a serious correction just pretty much across the board. Even the blue chip names have succumbed to selling pressure and are, trading 50% off their previous highs. Where is it that you find value right now? Which pockets, which sectors?
So I think there is there's value across the board amongst Indian stocks. But obviously, investors will try and look at the sectors where there is relative safety and growth. So I think there are very strong values in financials. So banks, insurance companies, these kind of companies, the strong ones that will definitely survive and will grow post-crisis. And in fact, RBI governor made a very positive statement. He has assured that all the private bank deposit holders are safe, so that I think those words are very important for the market and investors to take note of. So I think the private sector banks, well-established companies in financial sectors, insurance companies, and also pharma companies, some of the select IT companies, and also and there's an all-round recovery with a huge investment in public infrastructure. Then you'll see some of the cyclicals like infrastructure companies, cement companies, capital goods also will revive. All of them today offer very good value, very attractive value. Only thing is people are waiting for what kind of package and stimulus package government comes up with for businesses. They have done something which is Garib Kalyan, which is for the bottom of the pyramid, yes. That was urgently required, which is good. RBI has done some quick steps for liquidity, they increased liquidity, which is very positive, which will help the economy very well, because the CRR cut itself gives you 137,000 crores of liquidity. Along with that, the interest rate cut and the difference between the reverse repo and repo has increased, which will basically make sure that the transition happens and banks are compelled to lend. All these are very positive measures. They need to be complemented by a few more. And so, if you ask me, I'll bet my money on the recovery in Indian stock market. And maybe next 3 months, our market should do much better than the global market.
All right, thanks very much, Nirmal, for sharing with us your thoughts just in time. That